Hi guys, Brand Asset Management here, and today I'm looking at the Ford Motor Company, ticker symbol F, using my 7 steps. Let's just quickly have a look at the stock price over the last year. Pre-pandemic, it was around about $9 a share, hit lows of 4 and even, 3 at the bottom of the pandemic. That would have been an excellent buy time, and has rebounded very strongly and is now at $11.33. Price is not seen since around about 2018, so it is looking very good for Ford, and their share price has increased massively over the last year. Just before we get on to my steps, just want to say thanks for watching the video. Please leave a like and subscribe if you have not, and I'll be bringing more quality stocks every week. So as said before, Ford has a share price of $11.53 at the time of recording and has a market cap of just under 46 billion. So let's have a look at my 7 steps. First is the P ratio less than the market. The market's about 40 and Ford has a very low P ratio of 11.59, so that is a pass. Its sector is just under 25, so that is also a pass, and with a bonus mark here, Ford is currently lower than the historical average of the S&P, which is at 17.5, so that is 3 passes off the bat for Ford, looking very good. Next step is the revenue increasing, and that's no, it's gone from 156 billion to 129 billion, so that is a fail. But if we look at the revenue numbers here and compare to the pandemic year, you can see the trailing 12 months, the revenue is on an uptrend yet there, so that is a bit of a bullish signal. And is the profit increasing? The answer is no, it's gone from 7.6 billion to just over 4, but let's compare to the previous pandemic year, and we can see that the profit was decreasing massively, minus in 2020, but is now 4 billion in the positive, so that is really good again. Not as good as it was in 2017, but definitely on an upswing. Now, are Ford buying back their shares? And the answer is yes. They've bought back some shares, gone from 3.98 billion to 3.972 billion, so that's good news. They are rewarding shareholders. Let's head on my next step. Are the current assets greater than the current liabilities? Yes, 116 billion to 97 billion, and they have a lot of total liabilities, 236 billion, but still a pass nonetheless. So it is looking very good for Ford here, and on to the final step is the free cash flow increasing, and yes it is. It has gone from 11 billion to just under 24 billion. That is crazy high. Ford has a market cap of 45 billion and they have a free cash flow of 23, which means it has a 52% free cash flow yield, and it's trading 2 times free cash flow. These are obscene numbers. I've not seen anything like this in any stock. Closest I saw was AT&T, and I think that was about 9 at its highest. So to be trading at 2 times free cash flow just shows how much free cash flow Ford has as a company, but the market is not ready to value that higher. So what is my valuation of Ford? And I've done a discounted free cash flow model. I've estimated the future free cash flows. I have been reserved, and it is a pass on both the models. These numbers are very bullish again. Calculated start price of $54, which is a 377% discount. So discounted free cash flow says it's a buy. And the Buffett Graham intrinsic value, even that says that has a fair value of $51 a share and a Graham price of 38. So these models are massively favouring Ford. The reason why the first is due to the high free cash flow rate of 2. It just shows that these models are not perfect, but does say that Ford is a buy. And the Buffett Graham intrinsic value, it's this expected growth rate of 48% across the next 5 years. Analysts are pretty bullish on the stock in the next 5 years, can definitely see some growth, but will the share price be $51 to $38? I don't think so. I think it definitely has room for growth, but these numbers are quite high. It's interesting enough that these are in line. Calculated stock price and fair value are pretty much the same. Do I see this stock 5xing? Probably not, but I do think it has some great value and is undervalued even at its current price. And just quickly looking at some technical analysis here, you can see that there was a lot of bullish signals after April. Price broke through the shorter day moving average, then the longer day moving average, golden cross in September, and right now the 50-day moving average was acting as support for the price, but it has just broke through here. So it is on a bit of a downturn. If I just zoom in a little bit here, you can see that the price has just broken below the 50-day moving average, so that is a bit of a bearish signal, but will it continue to fall? See if the 200-day acts as support. Maybe it's not worth buying now and holding till it gets about there. It hasn't broke below the 200-day since since the pandemic. Actually, that was when it initially broke down below it. So this has acted as a support level in the past, so maybe wait, see if this gets a little bit lower, and then you can buy it at that point. So that is very good signals from the moving averages. Just added a channel here to see the highs and lows of the stock of the last year, and you can actually see it's just hitting the bottom side. It hasn't broke through this since June, hasn't broke through this channel at all, so this has definitely showed some support here. So it is looking like a buy. It could look like it's about to be on an upswing here, as it's not broken through this. This is held strong to up to September and beyond that. So I think this is quite a good time to buy, actually, looking at this, because it will be on an upswing. If it gets to around $14 a share, maybe $15 a share, might be worth taking some profits. But I think that the stock price will hold here. It'll be interesting to see in the coming weeks and months. Right guys, I want to say thank you for watching. This was my stock analysis forward, a bit of a quicker video today. Once again, please leave a like if you enjoyed the video, give a comment on your thoughts, and consider subscribing if you're not already. I'll be bringing more stock analysis out every week, so be sure to subscribe to see them. Thanks for watching. Catch you guys next time.